Welcome to the American Med Spa Association podcast, Medical Spa Insider. This week, AmSpa founder Alex Tiersch is speaking with Nick Liguri, CPA, owner of Liguri Accounting.
Hey everybody, this is Alex Tiersch, and I want to thank Nextech for their support of this podcast. Why settle for just keeping up when your business can be the trailblazer? Aesthetically Speaking, presented by Nextech, is the podcast where beauty meets business, keeping you ahead in this ever-changing world of aesthetic practices. Each episode, proven experts from various areas of the field provide tips and tricks that will take your practice to the next level. Pair the podcast with Nextech Med Spa, their sleek, modern software solution built to scale alongside every phase of growth for the lifetime of your business. You can book appointments faster, easily collect payments, and drive revenue through the roof. With an end-to-end personalized platform built specifically for your needs, your team won't have to fit into a one-size-fits-all software anymore. Follow and subscribe to Aesthetically Speaking on Apple, Spotify, YouTube, or wherever you like to listen to podcasts. And visit nextech.com to book your demo now. All right, everybody, welcome to the program. Alex Tiersch coming to you from the AmSpa headquarters. And we have on the AmSpa hotline today, we have a lawyer and an accountant talking taxes and stuff. You can't get better than this. Hopefully it's like that you're listening to this on like a Friday afternoon after lunch and you're just like, oh my God, I can't wait to hear from the lawyer and the accountant. But I have Nick Liguri from Liguri Accounting on the AmSpa hotline. And look, accounting is something that, it's accounting, taxes, things like that. It's similar to compliance and the law, and that I'm used to kind of talking about some of these subjects. People don't really get all excited about it, but nevertheless, it's such an important topic. And especially now as we get to the end of the year, and especially with all of kind of the changes and potential changes that are going on with some of the laws and the regulations, it's enough to make your head spin. So first of all, Nick, I appreciate you joining the program. How are things going?
Alex, great. Yeah, thank you for having me. Excited to be here. Things are going well, and it's hard to believe we're already in Q4 here and into the fall and starting to think about the end of year and tax season, which will be right around the corner here and on us before we know it.
Yeah.
But yeah, to your point, there's a lot of changes this year with the tax law and the bill that passed this summer. So it's a great time to start thinking about it. Like you said, not necessarily the most exciting topic, but as a business owner, it's an important one to pay some attention to.
Oh, I think it's exciting. This is super exciting. I'm curious, what's your, I used to, I've worked with accountants for a long time. Your kind of tax season is almost year round now, isn't it? It really is tough. There's certain parts where, we're trying to file individual returns, but it really is something that's kind of going on all the time. Is that right? Or am I overstating that?
Yeah, in some ways it is. For the most part, in a perfect world, your business is done by March 15th and your personal returns done by April 15th, but inevitably there's reasons that your returns need to get extended, whether it's if you have ownership in another entity and they don't file by the deadline, or you're waiting for K-1s and whatnot. So there's always items that delay things. And then beyond that too, we work with our clients in a way that is more year-round and proactive. So we're constantly doing tax planning and tax projections for our clients, which I would recommend for any business owner to be doing. Once April 15th is passed, it's time to start thinking about the coming year or the year that you're in and what you can do to optimize for the current year and plan for your situation.
Yeah, and let's kind of get into that, because it is something that is a struggle, especially with businesses where your income and your revenue maybe isn't, as predictable as maybe you'd think it would be. So once we get into kind of this time of year, but even going back a little bit, what are some things that people should be thinking about as far as planning for the end of the year, getting into next year? How should they be level setting? What should they be keeping their eye on? What are some of the things they should be noting and looking at so that they're ready to go?
Yeah, so first off, I always recommend having a pulse on your business financials. So at a minimum, you want to be looking at things on a quarterly basis and see where your profitability is at. I mean, I would recommend doing it more frequently than that, but from a tax standpoint, at least quarterly, know what your profit is or your loss is or wherever the status is of your business from a financial standpoint. And really from there, it's about proactively planning for estimated taxes is sort of the benchmark of where you want to at
Mhm.
least be planning for as you go throughout the year. So making quarterly payments on the IRS schedule just to cover yourself. What we always recommend as a starting point is the safe harbor estimated taxes from your prior year tax return. So that can easily be determined, and that's sort of your baseline. Um,
And what does that, because I've obviously I've dealt with that before. What does that mean? So with the safe harbor from last year, explain to folks kind of what that means on a quarterly basis and how that helps.
Yeah, so basically what it means is that you take your total tax due from the prior year, and either 100% of that or 110%, depending on your income net level, is the
Mhm.
safe harbor that you need to pay for your four quarterly estimated taxes. So for simplicity's sake, if your tax due was 50K and this year you're at the threshold income wise where you just need to pay 100% of that, you're going to pay 25% of that 50K each quarter, which will cover you from any sort of penalties or underpayment penalties when you come to filing the next year.
Right, and that's not necessarily the amount that's due. That's just the minimum you can pay over the
Right.
course of the year quarterly to make so you avoid any fees. And then at the end of the year, obviously everything has to be calculated and you got to pay in whatever.
Exactly. Then you reconcile it one way or the other at the end of the year. So that's the simplest way to handle it. But as you know, as a business owner, things don't, one year to the next, things are not going to be exactly the same, which is why we do tax planning throughout the year and try and keep a pulse on the tax liability during the year. Because, if one year your income is really high and the next year it's really low, you don't want to pay estimates on that really high amount. You want to actualize it to the current year and make sure you're not overpaying. And on the flip side, if your income was low one year, maybe you took depreciation, accelerated depreciation, dropped your income down, but the next year your income is much higher. You want to be planning for that so you're not getting surprised at year end where you've just paid the bare minimum estimated taxes.
Well, and so that was you kind of set up my next question. So, and this we've had some kind of choppy years this year, along with last year, haven't been maybe as great for everybody. Some folks have had good years, but for people
Yep.
who have had a less successful year and you're planning to pay in, you mentioned that the safe harbor is based upon what you paid last year. However, if you know you're making less this year, when you pay in and you could arguably be below that safe harbor rate, is that okay? And what does that mean kind of in the long term,
Yeah.
if you're doing that? Does that make sense?
Yes, it does. And basically, the part two of the safe harbor is the lesser of if your current year tax is going to be lower than that safe harbor amount, that 100% of the current year tax is that minimum, an alternative minimum threshold there. So if it is going to be lower, as long as you cover the tax due for this current year, then you're set, even if that's lower than what would be calculated as the safe harbor amount.
Gotcha. Gotcha.
Yep.
Okay. So what else? I mean, or is there anything else people should be thinking about right now? I mean, I always get, you always hear folks saying, "Oh, you got to take advantage of the last minute, end of the year deductions. Buy a big laser machine, and it'll help." Is that one of the things that people should be thinking about, or what else is there?
Yeah, I think that's always a consideration to think about is capital purchases. So right in the industry, laser or medical equipment is a good one, which can significantly move the needle from a tax standpoint. I always tell people with the caveat of like, do not buy a laser just to save on taxes. If it's a purchase you're going to make or need to make for your business and it's going to improve your business overall, then great, and the timing of that matters. So if it's something that's in the pipeline and you can put it into 2025, then great. There's opportunities there to impact your taxes significantly. So with the new bill that passed this summer, bonus depreciation was extended and brought back up to 100%. So you can claim 100% deduction on new equipment purchased in the year that it was purchased. So it has to be received and in service during the calendar year. But potentially that's big savings if you're spending, 100, 150, 200K on a piece of equipment that can
Right.
seriously impact your tax bill. So in a positive way. And
Right.
then,
And so just
Mhm.
real quick, in my mind, and correct me if I'm wrong, it's if you're planning on making a purchase like this, sometimes it makes sense to make it before the end of the year and get it completed so that you can take that tax advantage this year as opposed
Right,
to waiting, right? It's not necessarily, hey, go out and buy, like you said, buy something just because, but if you
exactly.
have a good year and you know you're going to have a larger tax bill, doing that will help, right? Hey, everybody, it's Alex Tiersch, and thank you to our friends at Cosmo France for sponsoring this podcast. You know what's really driving conversations in aesthetics right now? Patients don't want to look done anymore. They're asking for subtle, natural results, just a fresher, healthier version of themselves. It's no longer about simply filling lines. Focus has shifted to skin quality, long term regeneration, and building collagen. That's why regenerative medicine is stepping into the spotlight. And that's where Easy Gel comes in. Easy Gel, it's a fully autologous gel made entirely from the patient's own blood concentrate. No synthetics, no additives, nothing foreign. The beauty of it is that it's not just a quick fix. Thanks to the fibrin matrix, growth factors are released gradually over time, stimulating collagen and elastin long after the first treatment. That's why providers call it a game changer for under eyes and temples, those delicate areas where traditional products can migrate or cause unwanted results. Easy Gel truly reflects what aesthetics is: regenerative, natural, and long lasting. Want to learn more? Call Cosmo France today at 305 538 0110 or visit cosmofrance.net today. That's 305 538 0110 or cosmofrance.net.
Exactly. Yeah, like if this is something you're gonna do in the near term anyways, and
Right.
you're having a good year, you need that extra deduction, then maybe push it into December, November to get the deduction this year. Especially if it was going to be something December, January. If you have that choice, push it into December because it gives you a lot of flexibility from a tax standpoint.
Gotcha.
Yeah.
Okay. Great. Now we're
Yeah.
all set, right? So we're good to go.
Yeah, I mean that's the big one, and I think that's what people is always on people's radar is that potential. The one thing I would caution people on is, another thing people are always thinking about is, oh, maybe I should buy a vehicle for my business, and that will be a big
Mm.
write-off. There's a lot of misinformation out there about that,
Yeah.
especially with a med spa. Like from the IRS's standpoint, you have to be using that vehicle for business purposes.
Right.
So as a med spa owner, how much travel is really involved in the day to day? I mean, unless you have multi locations, there's probably not a lot. Commuting from your home to your spa doesn't count as business travel. That's commuting. So the reality of like auto deductions is not quite as enticing as people would make you think.
Yeah. Yeah.
So
I always get like people saying, well, if you have a 20-ton truck or whatever, it's automatically deductible. Are you saying that's not necessarily the case?
right. Right. Well, if it's not used for business purposes, then it's
Right.
not deductible. So yes, exactly.
So what, but can't the business just purchase vehicles for its employees?
It could, but the flip side is still the point of like business use comes into play. And
Right.
if you're just using it to commute, that's not really business use, it's personal use. So
Okay.
yes, the business could do that, but then it becomes an employee benefit and now it's taxable to the employee if
Uh,
that's personal use.
okay. Okay.
So yeah, so it's a little bit of a riskier area. I mean, a lot of people push the envelope, I think, with the auto deductions. And it's a risk calculation to think about, right? Like
Mm-hmm.
if the IRS was to audit, then you have to be able to support the business use case for it. So that's where things, the rubber potentially meets the road
Yeah.
with
Yep.
that.
What and I want to make sure we get all the kind of the tax planning moves that we need to make before the end of the year.
Yeah.
But I'm also curious, um, what's the kind of audit atmosphere like for businesses right now? If you can comment on that, it's kind of a maybe a curveball, but with the new
Mm.
administration, these new rules that are being passed, some of these new laws being passed, you heard about cuts, right? Cuts from does that have an impact?
Yeah, I would think so. I don't have data right offhand with the
Yeah.
IRS as far as audit rates and things like that, but I know since COVID, the audit rates have been just overall down. I think with cuts on the IRS internal side. I know there was sort of a big push over the last few months of a lot of catch up that's happened on the IRS's end, but I don't think overall, now this year versus last, there's any significant difference in the likelihood of audits for a business owner. I think as a business owner, there's always inherently slightly more audit risk than if you're just a W-2 employee and all your income is reported on a W-2 or 1099s,
Right.
just because it can be much more easily processed on the IRS's side. When it comes to business returns and business owners, there's just that extra complexity, which is inherently a little bit higher audit risk.
Yep.
But I don't know off the top of my head if there's any other factors from the IRS's side increasing risks.
Yeah. And just kind of a related question. I know I'm totally going off script here, but I'm thinking of stuff. What are some or are there red flags that people need to avoid? Med spa owners in particular, like, are there things that you can imagine that the IRS would be like, huh? I mean, like talking about the automobile deduction
Yeah.
is like, what are some things that people need to be wary of because that they can cause a flag, which doesn't necessarily lead to an audit, but maybe some further questions.
Yeah, so the auto is definitely one because the IRS looks at industry codes on your tax return, and that's how they sort of benchmark, um, returns that are being filed against others. And they look at basically if there's areas that are out of line with that industry standard. So auto is definitely a big one. The other one that's really common is the misclassification of employee versus contractor. And I
Mm,
know that's a common one in the industry is like,
it
an
is.
injector or an esthetician, like how are they being classified and being paid? Is it as a W-2 employee or a 1099? And really that comes down to what is their employment status? Are they an employer? Are they exclusively working for you or are they actually part-time and working other places as well? So that's a big item. That's harder to see as far as I think from the IRS's side from just a straight tax return audit. But when you're
Mhm.
filing W-2s and 1099s, it can definitely be looked at there, and that can definitely be a potential red flag and audit risk. The
Mhm.
penalties on that are fairly steep, so that's when you want to make sure you have corrects, from a compliance standpoint.
Yep.
And then other than that, it's really just are there like any significant expenses that seem really out of line or really high. Mixing in personal expenses is a common one, which can open you up to some audit adjustments, which happen.
Well, but what does that look like? Like how do you how does that manifest? If someone's like, is it just like dinners? Is it food? What is it?
Yeah,
Trips?
right. Meals is definitely a big one. Meals and travel are ones where it's common. Like if those are extraordinarily high, that can be a red flag. And then, other items like just sort of general office expenses. I mean, those are going to be there, but if they're significantly high or there's other
Hmm.
miscellaneous expenses that are really not classified on your tax return into sort of the standard buckets, that can be another item where, um, a return may get flagged.
Gotcha.
Yeah.
Okay, so what else what else should folks be working on, or have we touched on the major ones?
Yeah, so a couple other ones. So this year with the new bill updates, there's a big opportunity on the personal tax side to take advantage of some items. So
Okay.
one is the SALT deduction, so that's state and local income taxes. So
Right.
real estate taxes or state taxes. So that cap was previously at 10,000, which has been lifted. So now there's a much bigger opportunity where a lot more folks will be able to take itemized deductions this year than maybe they have over the last few years. So that's an area where you want to make sure you're getting those deductions for real estate taxes and state income taxes.
So
And then,
and that is literally just exactly. So you get to deduct your whatever real estate taxes were and your state income tax from your overall income.
right.
Um, okay, and that was capped before. God, I didn't even realize it was capped. I guess I knew it. It was capped, and now it's no longer capped.
Right, it was capped at 10,000, so that's now changed.
Okay.
And so that opens it up pretty significantly. And that was limiting people's ability to take itemized deductions. So if that cap being lifted now allows you to deduct more taxes on your personal return, and now you can itemize, the other thing to consider to go along with that is charitable contributions. So
Hmm.
that's another thing where if you weren't breaking over that itemized threshold, charitable donations weren't you weren't getting a benefit from a tax standpoint, but now you may be because of that change. So there's an opportunity to potentially group charitable donations into this year or a year where you know you're going to have itemized deductions. And same thing with your taxes, like real estate taxes, make sure you make that payment before the end of the year because that's basically deducted the year you make the payments. So there's a
Okay.
potential to sort of group those at year end to make sure you're getting all those deductions in the current year.
Yep.
It may make next year a little bit lower, but if you maximize it this year, next year's lower, and then sort of alternate years where you're maximizing those itemized deductions is a good way to manage your taxes year to year.
Okay. And what does that mean though? If you can itemize, that's I've never quite understood that either.
Yeah, so in its simplest sense, there's a standard deduction or an itemized deductions that you
Okay.
can claim. So it's an either or. So the standard deduction, it varies depending if you're filing single or joint or head of household. But basically, if your total of your itemized deductions are greater than that standard deduction, you take the itemized deductions instead of the standard.
Gotcha. So if the itemized, okay, so it depends on how many itemized you're going to have, and
Exactly.
gotcha.
Yeah, and the big items are the taxes, the charitable contributions, and then mortgage interest are the big
Right.
three that go into that.
Okay. All right. Gotcha. Um, Interesting.
Yep.
Any other laws? Well, and first of all, I want to make sure we get to all the things. So let's go with that. What's next? And then I do want to kind of get your thoughts on if there are, you know, any things that have popped up recently in the besides what you've mentioned.
Sure, yeah. So I'll go my last one really to focus on for before year end as a key point from a tax planning standpoint would be retirement planning.
Okay.
So make sure you're making your contributions to retirement accounts. That is something you
Hmm.
can actually do into next year. Like as long as you make those contributions prior to the filing deadline, they are counted towards the current year. But
Okay.
make sure you're maxing those out or planning to max those out or whatever makes sense to reduce your taxable income um, by utilizing retirement savings. So depending
Yep.
on your type of retirement plan you have, there's pretty significant opportunities with that and opportunities to sort of shift business income to personal income and then contribute to retirement planning. So that's another one. Make sure you're meeting with your tax advisor and your financial planner to optimize that piece. So those would be the three.
Gotcha.
The equipment, capitalize, take depreciation,
Hmm.
the itemized deductions, number two, and then retirement planning and making sure you're planning for your compensation
Yeah.
to be structured.
And I gotta ask a stupid question here, and I'm forgive me for those of you who know all about taxes and you're listening to this, just tell me to shut up. But the depreciation on on capital equipment, I've never understood that. Like so, and so just high. I don't want to obviously get into the weeds, but high level kind of how does that work? Because you're able to you depreciate it, which I'm not even trying to know what that means, and then
Mhm.
somehow that can help your taxes going on, or you can take more depreciation in one year. What's the kind of
Yeah.
the basis for that, just overall, so folks can know what we're talking about?
Yeah, so let's take a laser for example. If you're buying a laser, you're paying, you're purchasing that. Let's keep round numbers for sake of simplicity, 100K.
Yep.
Um, you have a couple options. So one is taking bonus depreciation, which means you're claiming 100% of that cost as a deduction in the year that you purchase it. So 100K deduction in this year if you buy it in December, right?
Right.
Option
Right.
two is depreciating it over 5 years. So there's a standard depreciation life from a tax standpoint. For equipment, it's 5 years. So
Okay.
that would be depreciated over a 5 year period. So that
So it's
$100,000 would get split up.
gotcha. And then can you split it up in any way that you want, or does it have to be in equal payments, or what's the
Yeah,
repayment
so
process?
it's a formula um, that's put out by the IRS,
Gotcha.
and it's a declining balance, so it's front loaded essentially. So the first
Okay.
years are higher than the end years if you're doing it over a 5 year period. But you can take, but with bonus depreciation, you can take 100%. But there's another wrinkle in that. There's 179 depreciation deduction, which allows you to take any dollar amount in the current year up to
Got
that total cost. So you could take 75,000 in year one and then depreciate the remaining over 5 years. So there's
gotcha.
flexibility there as well.
Gotcha. Yeah, I always find it like how like make it's like you got to plan this stuff, and I get it.
You
So
do, yeah.
so you want to, depending on what you want to take this year, it depends on how you're doing this year, but you're also kind of trying to project out future years that you haven't gotten to yet. And so it makes
Right.
it just, it's enough to make your head spin. It's like, I could take it all now, but if I did, what is next year going to look like? And you don't really
Yeah.
know. I mean, you think you can project, but you don't really know.
You don't. And that's the hard part too, is like people get into this cycle where you almost feel like you have to buy something new every year to get that deduction. Because once you take the depreciation, if you take it all in year one, there's nothing on that machine for the next 4 years.
Yeah.
So it's a one hit versus if you're taking it over 5 years, you're getting a chunk of it each year as a deduction.
Right.
So,
Right.
so yeah, it is something you have to think about long term.
Okay. All right. Have you, I mean, when you, see all these, laws that are being bandied about and talked about, are you, I mean, getting out your pencil and your calculations? Okay, what's the savings going to be? I mean, what else has happened with the current bill? I mean, anything, but you mentioned the salt deduction. Anything else major that folks should be aware of? Hey folks, this is Alex Tiersch, and thanks to our sponsors, Repeat MD. Big news! Repeat MD is giving away $150,000 in cash and luxury prizes this October. Rolex, Chanel, Louis Vuitton, and it all ties to the biggest virtual training event of the year for med spas and wellness practices. And it's free to all our listeners. It's called Sell More This Holiday Season, and it's happening Tuesday, October 21st at 5 p.m. Eastern, 2 p.m. Pacific. This live virtual event is going to show you exactly how to avoid the 5 profit killers that drain holiday revenue, turn gift cards and skincare into your number one revenue driver, just like Dr. Rajani, who sells over $10 million a year, steal the top holiday promos that 7-figure practices run, and even double your membership sales in 30 days. And here's the kicker. This isn't just another webinar. It's also the official launch of RepeatMD V3. 2 years and $20 million in the making. V3 is the first system designed to automate your revenue so you can sell more without doing more. So, if you're someone who's serious about making this your best holiday season ever at your practice, you need to be there live. Register now at repeatmd.com/sell more. That is repeatmd.com/sell more. And I'll put a link in the show notes. And again, it's Sell More This Holiday Season, hosted by RepeatMD. Tuesday, October 21st. Free to attend, $150,000 in prizes. Don't miss it.
Yeah, I would say the big one that's going to impact med spas that I'd want to mention would be tips and overtime.
Yep.
So pay on tips and overtime, there's a piece of that for employees that is going to be non-taxable. So payroll companies should be reporting this properly on the W-2s and at year end, but it's really
Okay.
important that those are classified properly in employees' wages this year. So that first 25,000 of tips received is non-taxable, which is great. I mean, from the employee side, that's a huge
Yeah.
benefit, which is nice. But it is something to make sure you're tracking it properly and getting that reported through payroll correctly, so the employees are getting the benefit of that. So that's
It
a
is.
big one this year.
Yep. Is same thing with over, is the first 25,000 of overtime is not taxed, or how
I
does that?
don't quote me on the number on that, but
Okay.
there is an amount that is exempt this year on overtime.
Okay.
Yep.
Interesting. All right. Cool.
Yeah.
Well, anything else?
Those are the big ones I would
Those are the
say.
big
I
ones.
mean, the bill is fairly expansive. A lot of it really isn't necessarily going to be directly applicable to small
Yeah.
business owners, you know how it goes. But and then really, whatever pending litigation, I always take the approach of let's wait and see.
Mhm.
As far as what other laws come through and in our past as far as
Yeah.
what's going to impact the taxes this year. So
Yeah. I'm also curious what, obviously you've been working with med spas now. Is there one or two things that you kind of wish more of your clients did and knew sooner versus, kind of trying to fix it afterwards, that you can impart on our listeners, say, here's something you maybe you should be considering, like, other than we've talked about, or have we pretty much got to it all?
yeah, I guess a couple things I would say, for our med spa owners that have MSO structures in place,
Yeah.
that's a big one where I would say starting on the right foot with that is really important from a
Yeah.
compliance standpoint. And
Right.
legal compliance is one huge aspect of it, but the bookkeeping, accounting, tax side of it is really important too. Where
Yes.
you need to have your books set up properly and the funds are flowing properly because that's just as much of a compliance issue as the legal side if it's not being handled properly.
Absolutely.
So that's a big one where I would say, when we get clients coming to us where they're 2 or 3 years into their MSO and they haven't really handled the books properly, it's like, you wish you had that set up properly because there's opportunities there for tax savings.
Okay.
And just, it creates a big headache that can definitely be avoided if you're working with someone who's familiar with the structure and can get that set up properly for you.
Yeah, and that's not always easy.
It's not.
I've had several owners who have their regular business accountants are like, I don't know how to do
Yeah.
this. It's kind of specialized, so you've got to have some idea of how that works and the flow of funds works. Are there, I've always wondered this, and I say this sometimes, are there tax benefits to doing an MSO structure, even if you don't necessarily need an MSO structure? That's kind of a loaded question, I realize.
Yeah, there potentially are. I mean, the big one is the qualified business income deduction. Um, for a medical entity,
Hmm.
that falls under specified service business, which the qualified business deduction phases out and is limited.
Okay.
For an MSO, though, that limitation isn't in place. So there is potentially, just due to the nature of the services being provided, one, doctor medical services versus management services.
Right.
Those are two different categories from the IRS standpoint. One has a phase out on a pretty significant deduction, one does not.
Mm.
So there is an opportunity there to optimize from a tax standpoint. So that's the big one. I know it's getting in the weeds a little bit with that, but it's worth investigating. If you do have an MSO structure in place or potentially could benefit from it. Um, you know, so that's the biggest one that I would say.
Yeah. 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 That's interesting. And it is, we are getting the weeds a bit, but it's more and more folks are learning about it. More and more folks are using it. And
Yeah,
it is key to have somebody who knows what they're doing. And it's also key to just to think about it. There's always potential reasons for it. Now, I've had folks tell me, yeah, but doesn't that make it more complicated? You get an MSO setup, you have multiple, now you're doing multiple returns, and it just makes everything more busy and harder. Which I suppose maybe is true, but as long as you have everything set up, then and you've got someone like you can kind of, push all that stuff over to you to have you do it.
exactly. And I think it's about relying on the experts in the areas
Yeah.
where their expertise is valuable. Like I'm never going to be performing any sort of medical procedures on anyone, and there's a reason for that, right? Like you're going to go to your local med spa to get your injectables done or your laser treatments, right? So same thing. Like unless you're an expert or have that expertise to do tax, prep, tax planning, go to an expert. Same with legal. I think as a business owner, it's important to focus on where your skill sets are and outsource the things that
Yeah,
are in your wheelhouse. So, I mean, that would be my piece of advice, I guess, on
for
that.
sure. For sure. Um, Yeah, no, I mean, I'm curious. How's it been kind of as you get deeper and deeper into medical aesthetics? What's your thoughts of kind of the business side of things and how people are doing it? I'm always curious what people's perspectives are.
Yeah, it's been great. I really enjoy the industry. We've been focused in the space now for a couple years, and something new to learn every day, which is exciting and interesting. And the industry is obviously changing and evolving quickly, which is great. So there's a lot
Yeah.
of buy and sell activity, which is keeps things interesting. I think there's a lot of opportunity for med spa owners, whether it's now or in the future, to sell their practices or merge with others and really consolidate what they're doing and optimize their operations. And I think there's a lot of people doing really well still. As much as there's been a little bit of a rocky road here, maybe the last year or so, I think a lot of the solid practices are thriving still,
Yeah.
and there's still lots of opportunity to growth. I think it's probably harder for startups these days than it would have been maybe a few years ago, just because
Yeah.
there's a little bit more market saturation. But the ones who are doing well, doing marketing well, and providing high quality services are going to continue to thrive from my perspective. So,
Yeah, I agree. I think that's right. It has been, like I said, choppy for some, but we're seeing people, there's still not enough really providers and not enough med spas. So there's still such an
yeah,
opportunity. I do think it's a little harder now than
sure.
it was. But there's also not, I've noticed there's not too many CPAs that are in the med spa world either. It's still kind of a new thing. When
There
you go to
are.
like CPA conventions, are you keeping your mouth shut so no one else finds out?
Yeah, I mean, the few med spa industry events we've been to, there's definitely a shortage of CPAs in the space. So I think it's a great opportunity, and there's a big need there. So we're happy to work with you if you're in need. And if not, or you're working with a CPA, make sure they're familiar with the space, give them the info, have them, educate themselves too on some of the nuances of the space. Don't just assume they know it. That would be the one thing is CPAs, there's definitely a shortage on the CPA world too.
Yeah,
So that's, make sure your CPA is giving you the attention you need, you're getting the planning in place, and taking advantage of what you can.
yeah, that's helpful. I just had another question for you and I forgot. Of course. Oh yeah, I know it was. Are you can folks first of all, where are you located and do you help folks all over the country or are you local? What's your kind of demo?
Yeah. Yep. So we're based in New Hampshire, but we have clients all over the country now. We have a bunch in the Northeast. We have Florida, Texas, West
Hmm.
Coast. So we can serve clients everywhere. Our team is also we're fully remote now. So our team is spread out as well,
Okay.
which is great. We're all U.S. based. We have that local firm feel, even though we may not be
Yeah.
in your location. But that's what a part of the value we try and bring to
Yeah.
our clients.
What's your favorite state for tax purposes?
Oh gosh. I mean, I think New Hampshire is a good one because we don't have just a typical income tax, so that's a great thing about New Hampshire. There is a
Uh-huh.
business tax, so that makes it a little bit, iffy as far as my favorite. I would say, Texas and Florida are up there too, where without the income tax piece. So.
Well, yeah, but that makes that, that doesn't make your job any better because there's less to do. So,
True, true.
um, all right, well, this is awesome. I know there's obviously so much more to get into. We'll get you back kind of closer to tax time too. What's the next deadline folks should be worried about right now, just before we sign off?
Yeah, so estimated tax payments for Q3 just passed. That would have been September 15th. So if you
Yeah,
haven't made those payments, I would do it sooner rather than later. And then really, year end is an important cutoff. But as far as taxes go, January 15th would be the Q4 estimated tax payment due date. So that's the
gotcha.
next big one from the federal side.
Okay. All right.
Yep.
Well, cool. I'll give you the last word and then let folks know where they can find you. I'm sure we're gonna have tons of people saying, "Oh my God, I can't wait to get my taxes done this year." What's the number I can call?
Yeah, so you can find us at ligoricpa.com. on our website. There's contact forms there where you can reach out. Also, we're on Instagram at MedSpa Accountants. You can find us there.
Med
And
Spa Accountants on Instagram. I love it. That's
I know,
awesome. I'm
yeah,
gonna
yeah,
co-opt that.
gotta be
Yeah. Do you
present
guys have
right
like
on
a
Instagram.
calendar that you put out every year? Like, the different accountants, like holding a tax book. Yeah. One of these.
It's
That'd
a
be
good
awesome.
idea. We'll get on that, but yeah, not yet.
Yeah.
But yeah,
Some free marketing for you. I promise it'll work.
yeah, appreciate it.
All right, cool. Well, look, I appreciate it. And yeah, I mean, please, for those of you listening, like, taxes are no joke, and no one likes to talk about them, and they suck. But when you do them right, and you've got kind of everything planned out, and you've got an expert, I think that's a very good point. It kind of just goes on in the background, and it kind of almost becomes
Yeah.
routine, and you just start, get into a habit of doing it when you need to do it, and you can start to plan on it, so it doesn't have to be as painful once you get going. Is that what you found as well?
Yeah, 100%. I think you hit it perfectly. It's just part of business operations. Just make it part of your quarterly routine at a minimum, and it'll be smooth sailing.
Awesome. Well, Nick, I appreciate it. Reach out to me if you have any questions, and we'll link up with you as we get closer to the tax season in the spring, maybe.
Awesome. Thanks so much. I appreciate you having me on, Alex.
Of course. Awesome. Hey, everybody, it's Alex Tiersch, and I'd like to thank our partners at Well Received for sponsoring this podcast. Did you know that nearly 40% of clients prefer to book appointments after hours? That's a huge part of your potential client base who need support after you've closed your doors for the day. In such a competitive industry, every missed call or unanswered chat can mean losing a client to your competitor down the street. But it doesn't have to be this way. Well Received is a 24-hour answering service specifically designed for aesthetic and wellness practices. Their team of real people handles calls, answers web chats, and books those valuable appointments, ensuring every client inquiry receives a prompt and personalized response day or night. And every plan comes loaded with value-added tools to keep your front desk running smoothly. With call recording, spam call blocking, and business phone numbers, your team can focus on delivering a great experience. The result? More new clients, increased loyalty and repeat visits, better reviews, and less pressure on your front desk staff. So, whether you're just getting started or scaling to multiple locations, Well Received helps your med spa grow. As a special offer for listeners of Medical Spa Insider, you can now enjoy 50% off your first 3 months of service with Well Received. This is a great opportunity to experience the benefits of the service without any hidden fees or long-term contracts. You can upgrade or downgrade your plan anytime, giving you the flexibility and control you need to grow your business effectively. Visit www.wellreceived.com/AMSPA to learn more and redeem this exclusive offer today.
Thank you to our producers, Madeline Muller, Marketing Content Coordinator, who organizes the podcast schedule and guests, provides topics and talking points, and myself, Joe DeGuzman, Technology Operations Manager. I handle the audio and video editing, voiceovers, and tech. Kate Harper, Senior Digital Marketing Coordinator, who makes all of our graphics and manages the podcast platform. Esme Uriastegi, Senior Social Media Coordinator, who makes and posts all the clips for the podcast and posts them to our social feed. Our music is by Ghost Score. Thank you for listening to or watching the Medical Spa Insider podcast. Please follow or subscribe wherever you listen to your podcasts, and subscribe to our YouTube channel for future episodes. For more information about the American Med Spa Association, please check our show notes or in the description below.